Okay, good afternoon, everyone. Thank you all for coming today. Let me introduce myself. My name is Aditya Bagas Nurhuda, and my last number is 36. I am responsible for this presentation. In today's presentation, I would like to explain to you how compiling financial statement. Okay, I will start by describing purpose of types of financial statement. After that, I will explain step in compiling a complete financial statement, and lastly, I will give a conclusion about all the material that I have covered. Okay, I would like to start by the primary purpose of preparing financial statement is to provide relevant and reliable financial information that support decision making by stakeholders such as management, investor, and regulatory authorities. Additionally, this statement ensures that company comply with legal and tax requirements. The main financial statement include the income statement, which report a company's profits or loss over a period, the balance sheet, which show the financial position at a specific point in time, then the statement of change in equity, which track change in the owner capitals, the cash flow statement, which record the inflow and outflow of cash, and the notes to the financial statement, which explain and provide additional context for the future report. Now, let's move on to the step in preparing financial statement is recording all business transaction. Each financial transaction, whether it involves sales, expense, or investment, must be supported by valid documentation. For example, invoice, receipt, or contracts. These transactions are recorded chronologically in accounting journal, either in a general journal or in special journal dedicated to specific types of transaction. This step lays the foundation for accurate reporting in the following stage. After transactions are recorded in the journals, the next step is to transfer or post them to the general ledger. The ledger organizes transactions by account types such as asset, liabilities, equity, revenue, and expense. This process helps consolidate all financial data into clearly defined account, making it easier to analyze and prepare report. Accuracy in this stage is crucial as it directly impacts the integrity of the financial statement. Once the ledger entries are complete and initial trial balance is prepared, this document lists all the account and their balance, ensuring that total debit equal total credit. At this point, adjustment may be necessary and their balance, ensuring that total debits equal total credit. For instance, depreciation of fixed asset, unearned revenue, and prepared expense must be adjusted. These adjustments are recorded through adjusting journal entries, and then an adjusted trial balance is created, which becomes the basis for the financial statement. Using the adjusted trial balance, the next step is to prepare the actual financial statement. The income statement is prepared first to determine the net income or loss. Then, the statement of change in equity present the company's financial position, including in asset, liabilities, equity. The cash flow statement is then prepared to explain how cash has been generated and used across operating, investing, and financing activity. Finally, notes to the financial statement are included to provide detailed explanation and background information that support the number presented. Once the financial statements are finalized, the company process to close the books. This involves closing temporary accounts such as revenue and expense by transferring their balance to the retained earning account. This step reset those accounts to zero in preparation for the next accounting period. Closing the book is a crucial part of maintaining clear financial record and ensuring continuity from one period to the next. Well, I have told you about step in compiling a complete financial statement. This brings us to the end of the final section. Now I would like give you the conclusion. The preparation of financial statement is a vital and comprehensive process that plays a central role in the financial management of any organization. It involves a series of systematic steps, starting from the accurate recording of financial transactions, followed by the classification and summarizing of those records into the general ledger, the preparation of trial balance, and necessary adjustment to reflect the true financial condition of the business. This step culminate in the creation of key financial reports such as the income statement, balance sheet, statement of change in equity, cash flow statement, and explanatory notes, all of which provide critical insights into a company's performance and financial position. This process not only ensures compliance with generally accepted accounting principles and regulatory requirements, but also support informed decision made by internal management, investor, creditor, and other stakeholders. Well-prepared set of financial statements serve as a reliable foundation for strategic planning, financial analysis, accountability, and long-term sustainability of the business. If anyone have any question, please feel free to ask them, and I will do my best to answer. Okay, finally, I would like to finish by thank you all for your attention. Okay, good afternoon.